Up, everybody? This is Sungko, the Korean bro. Today is 2023, January 27th. And today, let's look at article. These days, we have really good upward trend. So I'm really happy to look at articles because I know hmm, uh, the articles that I read are reflected on the charts these days. So I'm really happy with the overall trend that we have these days. So let's see. First, what I'm gonna look at is there are a lot of articles to read tonight. Let's see. EVs, robotics among growth drivers, chipmaker ST Micro gaps up. Um, hmm. Microsoft Combat is now underway. Shopify colors cut with handle base. Can momentum continue? Hmm. Can the crypto market realistically help you retire early? Okay. Tesla stock is soaring. Time to buy. Hmm. Will Wayfair stock hit $100 in 2023? One mega cap tech stock down 28%. You regret not buying on the deep. $1 million retirement and three perfect stocks for retirees. 80% of Warren Buffett's portfolio is invested in these seven stocks, three of the fastest. Okay, first things first. Tesla stock is soaring. Time to buy. Tesla fell 65% last year. Let's look at Tesla. Wow. We have 10% up from Tesla. Pretty darn great. Fell 65% last year. Investors seem to be betting the sell-off went too far. The company's earnings report shows a faster growing business that's likely to continue growing rapidly. The electric car maker's strong business growth justifies a premium valuation. The high growth stock is up 30% already this year. Is serving up investors quite the rebound after the electric car maker stock fell 65% last year. Shares seem to have found the floor more recently. The stock has climbed 30% year to date. Part of this move higher was driven by the company's fourth quarter earnings report, which highlighted Tesla's recent financial momentum and management's optimistic expectations for this year. The stock's sharp rise in 2023 likely has many investors looking closely at the stock. Is Wall Street's growing appetite for Tesla shares a sign of more good things to come, or does the stock's big move higher mean investors who didn't buy the stock when it bottomed earlier this year missed out? Okay. Incredible growth. Tesla stock's performance last year didn't reflect its business performance over that time. The company's record breaking 2022. features huge growth in vehicle deliveries, revenue, and earnings, even as Tesla grappled with rising interest rates, global supply, logistic constraints, a temporary factory closure in China, and intensifying competition, driven primarily by a 40% year over year increase in deliveries. Tesla's 2022 revenue increased 51% uh, year over year, and earnings per share more than doubled. Free cash flow also soared, rising 51% year over year to almost $7.6 billion. Looking to 2023, Tesla expects more strong growth. The company guided for annual vehicle production to increase about 31% year over year to 1.8 million units. Management stated that demand for its vehicles remains high, and orders are trending ahead of production. As a result, Tesla likely hopes to deliver almost as many vehicles as it produces. Deliveries equal to management production guidance would translate to a year-over-year growth rate of about 37%. However, Tesla CEO Elon Musk said in the company's earnings call that the company could potentially build around 2 million cars this year if there are no major disruptions to production or other unexpected challenges. A reasonable valuation. So, should investors buy the stock to take part in Tesla's business momentum? After all, shares are still well below levels they were trading at 12 months ago. While shares are still much cheaper than they were a year ago, they don't appear to be trading in bargain territory. The growth stock currently trades at about 66 times Tesla's free cash flow. A valuation multiple this high means the stock is priced for strong growth for years to come. Tesla's strong business momentum, however, suggests that the underlying business could grow into the stock's current valuation. After all, the company believes it can average a 50% annualized growth rate in the vehicle deliveries for the foreseeable future. Strong business momentum, however, suggests that the underlying business could grow into stock's current valuation. Overall, Tesla stock doesn't look like an obvious buy today, but also doesn't look like a sell further. Investors who really believe in the company may want to consider allocating a small percentage of their portfolio to the stock. After all, at least the stock's valuation appears reasonable and not grossly overvalued. The key word here, however, is small. Growth stocks like Tesla are risky, largely because rosy expectations are already baked in. Hmm. If things don't go as well as planned, the stock could underperform. Further, any investors who buy shares of this high-flying stock should expect a bumpy ride. The stock is notoriously volatile. So this stock is notoriously volatile. If things go as they had planned, it's gonna go upward. Mm. But then, since it's a risky stock, if things don't go as they had planned, it could possibly have a bumpy ride. Mm. That's what it says in this article. So the point here is that you um you invest small. That's the point here. Well, Wayfair stock hit $100 in 2023. The online home goods leader is focused on turning a profit after revenue fell last year, and let's recently upgrade the stock to a buy based on the company's efforts to control costs. Improving revenue trends are a catalyst to watch in 2023. So, what we are going to watch is Wayfair stock. Hmm. Okay, let's skip this one. One mega cap Tesla down 28%. You regret not buying on the deep. Microsoft's okay. Fiscal 2023 quarter second earnings report revealed a sharp slowdown, particularly in its consumer segments. This short-term speed bump as Microsoft gears up to lead the artificial intelligence industry. Microsoft stock is down 28% from its all-time high, which provides a green buy opportunity. Microsoft. Let's look at Microsoft. Uh, Investors sold Microsoft stock after its earnings report, but that might be an opportunity to buy. Earnings season for the quarter that ended December 31st, 2022 is now underway. Microsoft was the first of the major technology companies to report. Most Wall Street analysts have been predicting that high inflation and rising interest rates would begin showing up in the corporate sector's financial results at the end of 2022. And they were right. Microsoft's overall revenue growth slowed to a crawl, and its profits dipped compared to the same period in the prior year. But macroeconomic factors like inflation tend to have a lag effect. And the US Consumer Price Index appears to have peaked in July 2022. That means the upcoming quarters could be much more positive for Microsoft. And given the fact investors have seen the stock down its latest quarterly results, that might spell opportunity for investors. Wait, let's see. Mm. Tend to have a lag effect, and the US Consumer Price Index appears to have peaked in July 2022. That means the coming quarters could be much more positive for Microsoft. And given the fact investors have seen the stock down its latest quarterly result, they might spell opportunity for investors. The cloud picked up the slack. The biggest advantage Microsoft has in this tough economy is diversity. It collects revenue from both consumers and businesses. And often when one customer base spend less money, another picks up the slack. The phenomenon is occurring now. Microsoft's consumer segments are suffering as people have less disposable income to spend on big ticket items like new computers. The company's devices revenue and its Windows software revenue crashed 39% year over year in the fiscal 2023 second quarter. Likewise, its Xbox gaming brand saw a drop in both console sales and content revenue. On the other hand, the cloud was the sharing story once again. Azure is Microsoft's cloud services platform for businesses, offering hundreds of services to help you operate in the digital world. So Microsoft mm, revenue when revenue dropped because of the drop in sales of uh computer and like devices because people gotta spend a lot of money on it, right? But like they were pretty good in terms of selling mm, thing stuff like Azure. And Azure is a cloud service platform they provide, and offering hundreds of services to help with operating the digital world, including the simple data storage, web hosting, virtual machines, and artificial intelligence tools. So, simple data storage, web hosting, virtual machines, and artificial intelligence tools. It's what they provide. Azure's revenue jumped 31% in the second quarter, making it the fastest growing piece of Microsoft's business overall. The net result for Microsoft was $52.7 billion in total net revenue for the quarter, up just 2% compared to the year ago period. But if not for the company's operational diversity, it could have been much worse. The future is all about AI. Okay. Despite Microsoft's financial results being relatively muted in the quarter, the company was incredibly active in the AI space. It's still an emerging industry, and Microsoft is jostling for a leadership position. They might already be there. So, okay, they may have been really bad at selling computer and like hardware device, but they've been doing pretty well in cloud sector and AI, and like they're leader uh in those industries. So let's see. It has the most powerful cloud-based AI supercomputing infrastructure in the world to train and develop AI models, and it's used by customers like OpenAI, which built the ChatGPT conversational platform. Microsoft actually invested $1 billion in OpenAI back in 2019, but just announced a follow-up multi-year deal worth up to $10 billion, which will allow for deeper integrations. Microsoft Azure already offers OpenAI as a service. It has been used by more than 200 corporate customers. Azure's growth in the AI segment is lightning fast in general at the moment, especially in niche areas like machine learning. Azure ML has now doubled its revenue in 5 consecutive quarters, and some of America's largest corporations are on its customer list. But the partnership with OpenAI Cloud revolutionized consumer assets like the Bing research engine, which has always struggled to gain ground in Alphabet's Google search. Conversational tools like ChatGPT could completely change the way people seek information online. According to an core area of focus for Microsoft, okay, stock can make a comeback. As I touched on earlier, Microsoft's profit net income came in at 16.4 billion dollars, which was down 12% year over year, leading to earnings per share of $2.20. The stock has been on a downtrend for the past 12 months as investors expected slowing growth compared to 2020 and 2021. Over the long term, Microsoft stock has obliterated the performance of the broader market. When new opportunities emerge in industries like AI, the company could be set for a new phase of growth in the next decade and beyond. So investors might do well to buy the dip here. So the point is, um, so they are providing cloud service, whose name is Azure, and the second they are leading is AI, and they're in terms of AI they're like the leader, and because they are both emerging industry, they got really good future ahead. So you might as well buy it. Uh, you might as well buy the dip here. Oh, okay. Next, 80% of Warren Buffett's portfolio is invested in these seven stocks. The Oracle of Omaha has overseen a nearly returning Berkshire Hathaway's classic stock since becoming CEO. Portfolio concentration, maybe Berkshire Hathaway's on song here. Okay. Apple, we got Bank of America, Chevron, Coca Cola, Kraft Heinz. Okay, let's see. Consumer staple stock Kraft Heinz accounts for 3.9% of Berkshire Hathaway's invested assets. Altogether, these seven stocks round up to 80% of the assets in Warren Buffett's portfolio. Consumer staple stocks like Kraft Heinz tend to be attractive during periods of highlighted uncertainty, such as what we are experiencing now. Correct, such as what we are experiencing now. Yes. This is a company with more than a dozen well recognized brands and generally strong pricing power. Since food is a basic necessity, the expectation is for predictable operating cash flow from Kraft Heinz. But as I recently opened it, Kraft Heinz is quite possibly Warren Buffett's worst investment. The company's balance sheet is weighted down by large amounts of long term debt and goodwill, which leaves it little financial flexibility. If the US were to enter a recession in 2023, it's not out of the question that consumers trade down from Kraft Heinz to less costly store brands to save money. Let's see. Three of the fastest growing stocks on the planet in 2023. Rivian Automotive. Um, Ocugen. Lucid Group. Let's see. Rivian Automotive. Okay. There's little doubt that 2022 was a trying year for the vast majority of the investing community. All three major US stocks indexes fell into a bear market, right? Okay. Hmm. It's too risky at this point. Let's go to Lucid. Mm, hmm. Let's skip. Okay. The non-stop coup soared in 2023. Five stocks down 57 to 91% to buy before it does. The Nasdaq Compass rarely falls 2 years in a row. It has only happened twice since its inception in 1971. The index soars by an average of 33% the first positive year following a loss. That's potentially good news for 2023. Splunk. We have Splunk here. It's what we covered last time, didn't we? Yes. It's becoming clear that artificial intelligence and machine learning are going to play a big part in the future of business. Yeah, machine learning and AI are both going to take a big part in the business in the future. And that's why Splunk makes the list. The company is a machine learning specialist with a host of high profile customers from Domino's Pizza to the McLaren Formula One racing team. Machine learning specialist with a host of high profile customers. Machine learning specialist. Okay. Splunk's platform, which is now being supercharged by the cloud, is designed to ingest mountains of data in real time to deliver actionable insights for its customers. These insights can alert businesses to technical issues or even ways to improve sales through digital channels. In essence, Splunk turns noisy data into true value, and that's something all companies need in the digital age. Splunk is used by 90 of the Fortune 100 companies, and it has 764 customers spending $1 million per year. Its annual recurring revenue set to top $3.6 billion by the end of fiscal 2023. But the company values the addressable opportunity $100 billion. So it still has a long runway for growth. So let's see. Splunk. Let's look at YouTube clip. Okay, Splunk. Okay, we got a lot of video clips about Splunk, and we'll look at it one by one. Okay, it's a general interview by the CEO. The guy name is well, it's not stated here, but it's an interview of the CEO of Splunk, and he seems nice. That's what people think. How do you thrive in today's unpredictable world? You keep your digital system secure and resilient, and above all, you innovate. Splunk is an extensible data platform that processes data from any cloud, any data center, and any third-party tool. A massive scale will ready to help you accelerate digital transformation and pave the way for incredible innovation. Like, Okay, so I watched like a few video clips about Splunk and the interview of a CEO, and what I found was that he seems pretty nice, and mm, he seems to know what he's doing, and like the one that I watched uh, shows that Splunk is a platform where people can use data freely, and like this platform helps you have a data driven business. It helps you have mm, it helps you maintain data and change a lot of data uh, into meaningful business. Uh, and that's where it's headed. Like this company's main motto is about making company have make company have mm, meaningful data, and that meaningful data can be used in something good. Let's look at Splunk in detail and see what they really provide. Okay, it's the video clip that I'm about to watch is about Splunk in detail. Okay, so to sum up, the point of this video clip is that Splunk uh, can be used by a lot of industries, can be used by a lot of companies in a lot of industries. And like what they provide is an index. index is like the one that a company can use to mm, organize their data. Like in, for example, hmm, they got a lot of uh, mm, for example, there's like an like password, not exactly password, but like a paragraph, which is written with a random alphabet or like numbers, and normally people would never understand what it says, but then if you type a certain meaning to certain random words, and that matches, and then it can be led to uh, metadata, and it can be used as a something productive source. So at the end, their service can be used as both structured and unstructured, and they can be also used in IoT services, and like pretty much their service can be used like anywhere. Hmm. That's the point of this video clip. And let's look at this one too. Data to everything cloud platform Splunk. Turn data into doing that. What was, what was said in the video clip that I watched a bit earlier. Solution engineer, tenure anxiety. Machine data accessible, valuable, and accessible, valuable. So in our daily life, we use a lot of machine, and by using the machine, a lot of data can be extracted, and that data can be used for something valuable, right? And their motto is to have that data into meaningful source to everyone, and get real answers in real time. So it's not just for a corporate business, but like for like individuals and like for small and medium sized business. Everyone can have data, and that data can be used for something good. Okay. So uh, let's talk about this in depth. And like I said earlier, we use a machine every day, and that a lot of data can be extracted from using that machine. And mm, uh, as an normal person, nobody will be able to read what machine says, and it's like random words, right? Correlate it, normalize it, and match it. Hmm. Visualize it and make it pretty. Correct. Okay. Okay, if you are by using the data instead of like being proactive, be reactive, because you can use the data and then be preventive, right? Mm. On-premises IT, perpetual licenses relies on means, Splunk Cloud Solution. Splunk Cloud for each team to do more interesting work from administering ID to turning data into value. Okay, I watched a part of this video clip, and it seems that Splunk is one that I have to invest as well. We'll see. Okay, Splunk. And let's go through the other ones. We don't have that much time. So, next one we have is DigitalOcean. Cloud computing technology touches almost every aspect of the corporate world. Day-to-day operations are rapidly shifting online, and the cloud enables companies to do more with less, especially smaller enterprises. DigitalOcean is a provider of cloud services with a focus on startups, established businesses with under 500 employees. It's competing with giants like Amazon Web Services and Microsoft Azure. DigitalOcean offers solutions for data storage, web hosting, software development, and even video streaming. The strategy is to beat gigantic competitors on price, usability, and especially on service. So they're not the leader and they're like competing against Amazon Web Services and Microsoft Azure, which is something that uh this is not the situation I'd want. So I'll just skip. DocuSign is the one we have next. Was a pandemic darling. As much as the world went into lockdown, digital technology reigned supreme, and DocuSign electricity and software kept the business world moving. The company expanded into new verticals, including country lifecycle management through its Agreement Cloud, which stacks down significantly from its all-time high. It might be gearing up for a comeback. Okay, we have uh, DocuSign, C3AI. By this point, it's possible you notice most of the competition in this piece use AI somewhat. C3AI might be the biggest opportunity of the branch, as it aims to dominate enterprise AI, which is an industry helped create. C3AI sells ready-made and customizable AI applications to 236 customers. These applications help companies access the benefits of AI even if they don't have the internal resources to build their own models from scratch. The spread of industry taking this technology is diverse and include all engaged financial services, manufacturing, C3AI. Okay, C3AI. And last but not least, the one that I'm going to watch last is a C3AI, the company name. Hmm. I'll be watching it for only quite a few minutes, and then I'm just gonna finish it because we don't have that much time. It's already 12 o'clock at night in Korea, so okay. Okay, we don't have that much time. We're out of time, and I'm gonna come back tomorrow or the day after tomorrow. Okay, bye bye.